This is Monday, June 3rd, beginning of June. Market analysis, Stan Ehrlich. We start out with the indexes, the E-mini, and go to futures markets and sometimes sectors, forex, crypto, cyclical analysis, a variety of things. Seasonal tendencies, October lows. We have all of the indexes, except for the Russell, providing new ER sell signals last week. So far, so good. That's the red bars on the very top of the rally. That's the way we like it. Sell signals on the exact high day, May 23rd, as well as the sell signal the day before, and what I come to call is a complementary sell signal on May 28th. So on Friday, we earlier in the day dropped off to new lows by quite a bit, down to around the low 52, 0 something, 4 something. But all of a sudden at the end of the day, there was a very big rally causing a bullish engulfing, which provided a little strength this morning. But as you'll see, we're down almost 4 full spider points, so to speak, SPY, 38 E-mini points, 38 and a quarter, almost low and last, not quite. And that's a pretty good break these days. Anything that's up or down 4 points is not too bad. In the old days, COVID days, that would be very, very small. But I want it to make new lows again. I think we have a double top formation. If that's true, the downside objective is approximately 45.80 for the E-mini June futures contract, which won't live that long, so it's going to be a little different for the other ones, but the measurement techniques are the same. And I'll get to the other contracts when we start trading in September. So I'll be looking for new lows very shortly. This is the 1 minute E-mini. We challenge support. The market is bouncing out of it slightly. Nothing major as yet. I don't think it's going to go very far, and I do think there's a good chance we'll make new lows by the end of the day today. Next, the spider, the granddaddy of the E-mini, and we have almost low and last, same situation, only one sell signal, but it is the exact high day of 523, like some of the other indexes. So the downside objective is approximately 458. Now that is a little lower than my original expectations I was talking about for weeks in the last couple of previous months. But now we have a different formation and a different situation, and it's a little bit more bearish. Next, the spider 1 minute. You can see where the new short sale signal occurred. When my price action for ER signals custom programming turns it red, and we're in a short. Also, the ER1 position trade still got stopped out, and that was with a very nice profit just on Friday and immediately before that rally just started. That was good. Now, on the 24th, we had a rally which allowed the ER3 to get short, and it is, because it's got a looser trailing stop, still short. So it is hopefully going to make more money than the profitability of the ER1 overnight. Not quite as profitable at the moment, but pretty good. Looking for new lows. QQQ. On Friday, finished closing an old gap from May 14-15, yeah, and turned around really sharply like all the other indexes in the last approximate hour of trading. Follow through to the upside this morning is leading to lower levels, down almost 2 points at 448, give or take, 449, give or take a little. And I'm looking for new lows. Now, this daily data chart really doesn't look like a double top so much. I'm so happy to say that we did get a new short sell signal, the red, on the high day on the 23rd with the QQQs. And that means probably also in the NASDAQ as well. So I'm looking for a move down on the Qs into the 412 to 395 range. But there is a problem as to whether this is really a double top or not. I'm skeptical. The top of the market was a bit too high for my comfort scale, and I'm going to stick with what I just said about support and the objective. And of course, the QQQ short-term 1-minute chart, near low and last, on the sell signal a week ago, May 23rd. We are still in the trade, and this is ER1 with a sizable kicker, slow, therefore moving STS, smart trailing stop, that's up here. So it should start to come down very soon if we continue to see more weakness. At the moment, the trade is quite profitable, and we've had it for about a little over a week. NASDAQ futures, same sell signal, May 23rd, and another one, but not the highest high. May 23rd was the best one, and it's still the greatest, and we're still short. You can see the little green trade line. Looking good. My now downside objective is about 17,370 to about 16,590. Next, 1 minute, which is a 5-minute chart on the NASDAQ June, and I'll be rolling again very soon into the next futures contracts, dropping very quickly. But remember, the NASDAQ, the Qs, the NQ, during these last several weeks has been the strongest, the quickest, the best in maintaining the strength and climbing to new highs, quicker, better, faster, et cetera, et cetera. And on the way down, it has been still the strongest. And the last one to make new lows, when the market pops back up again, it does it a little better job than the DIA, YM, and the Spider, the ES. So take that into consideration at the moment. Now, that won't last forever. That will change sooner or later. We're looking at the NASDAQ YM daily data. If this double top, and this is actually one of the best formations, and I am so tickled pink to tell you, and you can see it, that we got a sell signal on both of the highs as this double top formed, and on the DIA, the YM, the bottom also. All three of the last significant turns, we have my signal. Wow, love it. We're still short from the last. Looks like actually, I'm sorry, we got bumped out with a very nice trade on Friday. Given the kicker, that means the multiplier for the trailing stop, which you can change. A bigger number means it'll move slower, kind of like a moving average, but it's not a moving average. I do not like moving averages for the most part. If it's a small number, it will move the stop faster, for better or for worse. I'm not saying either one of them is good. A small number, normally a scalper or a swing trader might use the smaller numbers, take profits quicker, but not necessarily the bigger profit. Investors certainly want to have a much slower moving, longer term, larger kicker and stay in the trade much longer, again, for better or worse. Bonds, well, no, we got the Dow futures 5-minute chart, and you can see it's not too far away from the lows since the top of the market. Now bonds, well, doggone it, the Russell. So the daily 5-minute chart in the Russell, near the lows, the Russell did not have the same topping out situation as the other indexes, and it did not have a sell signal on the top either recently. It just had a huge, major resistance area for the last 2 years, stopped the rally again, And I'm expecting the Russell to come down probably to around 1930 or so. Now the bonds. Good rally here today. And notice the bonds have been rallying while the indexes are going down. So I think bonds coming up to a resistance area again are about to stall out and come right back down to 115 or maybe even lower. I can see it moving down to 114 even soon. 10-year notes, daily data chart bouncing up like the bonds. I don't give it much follow through likelihood, and I do think it's going to challenge the lows of last week and make minor new lows from last week's lows soon. Crude. Bye-bye crude. I told you triple bottoms are pretty rare to begin with, and we just smashed through that with a big down day and got oversold. Just barely the beginning of oversold right now, about low and last. I do think this market could go all the way down to 68 again, and maybe even a little bit lower, the next major support area. Natural gas. We got a sell signal a couple of days ago. I don't have ER3 loaded, but if I did, the little trigger line would be right about this price, 2.7, and we sold it short on the rally high, not the high of the rally, but the rally this morning with a nice profit on ER3. I'll turn it on for you for tomorrow, and this is looking great. I am expecting it to come down to 2.480 and probably as low as 2.310, and maybe even a little lower than that, down to the next significant support area, testing the lows of the whole bear trend. Next, heating oil. Crashed through just a second. Yep, natural gas. I skipped natural gas, didn't I, by accident? Just a moment. That's crude. Crashed through the triple bottom. Good. Natural gas bouncing somewhat, but we got short on the rally. Okay, that's right. Now, heating oil. Getting a little confused here. The support area did not hold. It tried to, with a very modest small range and not much downside progress on Friday, but just collapsed through it today. This is very bearish, and I'm expecting a move down, oh gosh, maybe down to 1.6. I'm going to say 1.8 to 1.6. Big move down in energies in general, heating oil in particular, crude as well. Now we got gold, silver, platinum, and so on. Today, we have a bounce, a rally after it made minor new lows. That's pretty good. Starting to make new lows for a couple of weeks. You usually have downside follow through, but instead, this gold market has popped back up somewhat, but there's no reversal. I can't give it any particular profound commentary about bullishness. I can only say I think it's still going to break the 2308 level, which is the lowest low between the double top formation, and that triggers off a downside of objective of about, let's call it 4145, 4150, something in that ballpark. What about silver? We have a little bit of a double top in silver. It's not the best I've ever seen by any means, but today we did break below, but we didn't stay there, the trigger point. So maybe it's going to bounce a little bit more and then get down to today's lows and stay there, close there, and that would perpetuate a move down to, or predict a move down to 29.3335. And if that doesn't hold, and I don't think it's going to, a move down to probably in the ballpark of 27, 26 and a quarter. Next, platinum. Sell signal on top. Fantastic. The high day. We have support being challenged with today's lows and broken by just a hair. But at the moment, we're not really bouncing much. This could be, looks like it's going to be a new low closing for the last few weeks. And if it drops below today's low and stays there, we got a new low and a new low close below all previous lows for the last couple of weeks since our new short sale signal on May 20th. Great. I'm looking for a move down, probably in the ballpark of 954 to all the way down to around 890. I expect to see a lot lower levels coming up soon. Next, we're looking at high-grade copper. Overbought conditions. Amazingly enough, it topped out on overbought conditions almost exactly at the previous high of the market that was when? March of 22? Yep. And that high, March 7th of 22, was a bearish engulfing ER sell signal on the high day. And look what happened after that. Holy cow. Big break, move back up again for several weeks. Big break again, move back up again for a while, but no change of trend, and crash. Now, I'm not saying it's going to do the exact same thing, but it could. Why not? Okay, copper, bearish, obviously. Looking for a lot lower. First stopping point might be around 4.4. Next, silver. No, I'm sorry, that was copper. This is soybeans. We have a double top formation I talked about last week with a bearish engulfing just after the highest high on the second high. The downside objective on the pattern, the small pattern, is 1151 or 2, 1152. Dangerously close to the low, and we caught the lows on beans, soybean meal, corn, and wheat. We only missed soybean oil. 4 out of 5. So here's the beans. Green on the bottom, April 19th, ran into a double top. So now we've got some bearish activity, new lows by quite a bit, a little bit of a downside breakout. The downside objective on the small double top is 1152-ish. Let's see what happens if we can turn around and perpetuate the long-term bull trend. Now we're somewhat in jeopardy. Soybean oil coming down, but this gigantic long-term head and shoulder bottom is still intact. You have to start closing below 42.50, I will say, in order to start to kill this big formation. So I'll just leave it at that. There's so much elbow room up or down for soybean oil here. It's ridiculous. Meal. We got the exact low day, March, what was that? February 29th, exactly. But we ran into a minor double top, and we got a sell signal, an official sell signal last week, working perfectly. So I have to be modestly bearish because of the sell signal and the double top, despite the fact that the longer term trend, in my opinion, may still be up. But we're having a downside correction, which was forecasted by the sell signal and the minor double top. Now, as of Wednesday last week, a minor downside breakout from the double top, and the minor downside objective is at 340. And we're at 361 at the moment. So not terrible, but also putting the longer term uptrend a little bit in jeopardy. What do we got? Corn. We got the bottom of the corn market to the exact day on May 26th, February 26th. And it is coming down close to some support and getting oversold. So corn just might start to bounce here very soon. I want to see how it handles this level at 435 if it can touch it or real close to it. And we're 41 right now. So keep your eye on corn for maybe another bullish engulfing, and a buy signal again would be great. Wow. Okay. We've got a brand new sell signal in wheat today. This is not a double top. It's now 2 sell signals in the approximate same price range in the last 2 to 3 weeks. The high is an overbought condition. The last time we were high, 1, 2, 3, 4. That's right. This is good. So I like this red new short sell signal. We are now short wheat. We did get the original bottom on 311 all the way up to this top. And that sell signal, that one was bad. That didn't work. That was a small loss right there on May 1st, April 1st. So I'm now looking for a minimum downside move to 470, probably 420, 620. I'm sorry, 647, down to 640.20, maybe even lower than that. New short sale signal, ER signal today in progress right now. Cattle dipping down a little bit more and momentarily almost exactly unchanged. Kind of hard to say here whether the long-term trend is up or down. You got the high, we got the sell signal on the top of the market perfectly in cattle. We got a major whopping low in oversold conditions, and then a buy signal, not quite at the bottom, but obviously pretty good. No sell signal on top, but part of, if you want to look at it that way or not. And here we are, no higher highs, no lower lows, kind of a gigantic pennant formation. Okay, I'll draw the lines in for you real quick here. And that would be the top of it. And this would be the bottom of the pennant formation. And there you have it. So we're in the middle. Not to say too much about that, sideways. Next, hogs. We're looking for an outside down day in progress right now, but nowhere near overbought or even lately, so there's no sell signal. This is just simply a bearish engulfing Japanese candlestick, which implies it's going to turn down. Those are the ones we love, smack on top of the market, the high day in hogs also, April 10th. The minimum downside objective forecasted by this shoulder, head, and shoulder top is, and we're getting awful close, 94.70. I've been talking about it for weeks. So we're almost a new low ground, not quite. And I think maybe this week it's going to get hit. Next is OJ, and now I have to change over to TradeStation. Apologize, we got data feed situations going on. We have OJ, extreme overbought conditions, full screen, and finally topped out last week. Big down day Wednesday, whopper on Thursday, and another big day, down day on Friday. So in 3 days, it wiped out the gains of 1, 2, 3, come on, 4, come on, move over, 4, 5, 6, 7 days or so, twice as fast going down as going up, so to speak. Now, this reversal today doesn't mean too much to me. We're in neutral territory. It is a bullish engulfing, just barely. So maybe we're going to close this gap also. That's the only thing I can think of. Going back up to 476.5, basically, and then turning back down. We've got sugar. Very, very rare to see a head and shoulder top, a little unusual with the sloping double highs for shoulders and a bit of a rolling head, but the neckline downward slanted. All of that is not that unusual, but fairly rare. This is what I'm talking about. The market broke the neckline, creating the downside objective of 1360. But look, the next day it tested the neckline and started to go down a little bit, and then again tested the neckline and went down, but no new lows. And a third time tested the neckline, but couldn't make new lows. And guess what's happening? Number 4, this is not good. The reason is when you break out of a head and shoulder top and go back up to the neckline, almost always there's only one test, and that was it. And then you make new lows, which this did or tried to, and there was no downside follow through. And we have actually been going sideways in almost the exact same sideways price range for weeks. That's unusual. This could get very explosive, either up or down very quickly. If it starts to close too strong above the neckline, it could rally quite a bit very quickly, and the other way around could drop like a rock if you start to drop below these lows. So watch for the breakouts or the failure of the head and shoulder top. Next, we've got overbought conditions today for the first time in a while in cocoa. Support levels held on a closing basis, and we turned around and this is called a bear trap, by the way. You make new lows and it closes in a reverse direction substantially. and just takes people by surprise. When they see the new low, usually you're going to stay down there and go down some more. But you have to be watching for bull and bear traps. So this bear trap is now probably finished, getting way up into overbought condition. Looks like it could be turning down as of today in cocoa. Coffee, brand new bearish signal on Friday. I believe it was in place before I did my YouTube and I talked about it, I'm pretty sure. Today's rally was just great. Right back into the new short trigger price for ER3's new short. We almost sold the exact high of the day today and having a small short-term profit on ER3 scalp and ER3 overnight at the moment. ER1's signal has not been broken. We're still bearish, looking for a move all the way down to about 192 and maybe a lot lower than that. And cotton the rag has made a new low, crashing very quickly in the last Thursday last week, Friday and today, total new lows. This could get quite bearish. Let me see here. Specifically the July futures contract, I expect to see contract lows probably tested at a minimum 94.44-ish and maybe a lot lower than that. That's it for today. Profitable signals for you. If you got any questions, info@ersignals.com, or you can go to www.ersignals.com.